Stop scrolling because one tiny tax detail can freeze your refund for weeks. It's not the big stuff that gets most people. It's the quiet rule changes and the paperwork mismatch. This hits employees, gig workers, parents, retirees, and anyone who moved money through apps. Stay to the end because I'll show you what's actually at risk and the step you can do today. Before we get into it, subscribe now. Not as a favor to me, as protection for you. These rules shift, scams evolve, and the same old routine stops working fast. If you'd rather stay ahead than clean up a mess later, lock this channel in. You'll feel the difference the next time a confusing letter shows up. Take a breath. You're not behind, and you're not in trouble just because rules changed. You're here early, and that's the whole advantage. My job in this video is to keep you steady, keep you accurate, and keep you moving forward. And there's one small detail most people overlook that decides whether things go smooth or get messy. Here's what's at risk if you file on autopilot: delayed refunds, surprise bills, notices that feel scary, and lost deductions you actually earned. Who is affected? Pretty much anyone who has a paycheck, receives tips, does overtime, sells online, freelances, or has kids. What you'll learn is how to spot the new pressure points before you hit submit. And why staying to the end matters is because I'll reveal the overlooked detail that prevents the most common mismatch problem. Quick reset. Taxes are not just math, they're paperwork matching. The system compares what you report to what other people report about you. That's why the biggest consequence is confusion first, then clarity, then action. Action today means you don't spend your spring proving obvious things later. Let's start with the mindset that keeps you safe. You're not trying to beat anything. You're trying to file clean, claim what you qualify for, and avoid preventable mistakes. So we'll go step by step, in a way that makes your next filing decision feel obvious. And yes, we're going to talk scam safety too, because that's part of filing season now. First step, separate rules that change your tax bill from rules that change your paperwork. A rule can give you a new deduction or credit, which lowers what you owe. Another rule can change what forms you receive when you receive them and what gets reported. Most people only pay attention to the first kind, then get blindsided by the second. That overlooked detail I mentioned lives in the paperwork side, and we'll come back to it. Attention reset. If you only remember one thing so far, remember this. Your refund speed is often decided by whether your numbers match the forms sent about you. Not by how honest you feel, not by how careful you were, but by whether the computer can reconcile it. That's why we're building your filing around proof, not vibes. Now let's go through the main areas where new rules tend to show up. If you earn tips, your filing can change even when your job doesn't. Sometimes there are new deductions, sometimes new reporting requirements, sometimes new definitions of what counts. Even if nothing new applies to you directly, the paperwork rules around tips can tighten. So your action is simple. Track tips daily, reconcile them weekly, and make sure your year-end documents reflect reality. Here's the consequence confusion clarity cycle for tipped workers. Consequence: you underreport tips and get a notice later, or you overreport and pay extra tax you didn't need to. Confusion: you don't know what counts as a tip versus a service charge or pooled distribution. Clarity: if you didn't choose the amount and it wasn't voluntary from the customer, treat it differently and verify how your employer reports it. Action: keep your own log so you're not guessing when it's time to file. Real-life example with easy math, and I want you to picture a real person doing this. Let's say you make $18 an hour and you average $90 a shift in tips, 5 shifts a week. That's $450 a week in tips, and over 50 weeks, that's about $22,500. If you kind of report it and you're off by even $4,000, that mismatch can trigger letters and delays. The fix isn't panic. It's keeping a clean log so your filing matches what gets reported. Now, over time, because this is where people misunderstand what changed. Overtime can affect your taxes in 2 ways. Your income goes up, and your withholding may not keep up correctly. Sometimes there are special deductions being discussed or implemented for certain pay types, and sometimes there are new boxes on forms. I'm not going to promise a specific deduction amount in this video, because those details can change and phase out based on income and filing status. What I will tell you is, How to make sure your overtime doesn't create a surprise. Attention reset. Do not assume your paycheck withholding automatically knows your situation. Withholding tables can lag behind new rules, and employers often follow standard settings unless you update your form with them. Consequence. You work extra, you earn extra, and then you owe extra at filing time even though you felt like taxes were taken out. Confusion. You think overtime is taxed at a different rate, when it's usually just withholding that looks bigger on that check. Clarity. It's your total year that matters, and your withholding settings decide whether you prepay enough. Real-life example number 2, because this one hits hard when it's not planned. Imagine your normal withholding is $160 per paycheck, but during a heavy overtime month, it jumps to $240. You assume that means you're covered, but the higher check can bump you into a different overall bracket range for parts of your income. Now flip it. If your withholding stayed too low by just $60 each pay period for 26 paychecks, that's $1,160 you might owe later. Action. Check mid-year, not at the deadline, and adjust if you need to. Are you the kind of person who wants a calm filing season with zero surprises this year? If yes, would you rather adjust one form now or argue with a notice later? Now let's talk about changes that affect older adults, because that's where scammers target hardest. Sometimes there are new deductions for age, sometimes changes to medical-related accounts, sometimes shifts in retirement distribution rules. If you're helping a parent file, this section is especially for you. And here's your scam safety rule. The IRS will not ask you for a code from your phone, and nobody legitimate needs your login to fix a refund. Consequence. A scammer catches you when you're already stressed about rules changing. Confusion. Caller ID looks real, the script sounds official, and they use urgent language. Clarity. Never trust caller ID, never click unknown links, never share one-time codes, and never pay with gift cards or wire transfers to unlock anything. Action. Hang up and call back using a verified official number from a real letter or an official channel you initiate. Let's move into the area that surprises drivers and commuters. Vehicle-related deductions and documents. Sometimes the changes involve interest, sometimes mileage, sometimes what counts as business versus personal use. And this is where that small detail starts to matter more, because business use requires records, not memory. If you drove for work, delivered food, did rideshare, or ran errands for a side hustle, your records are your shield. Attention reset. Your phone can be your best record keeper or your biggest blind spot. If you don't track miles as you go, you will not reconstruct a year accurately from calendar guesses. Consequence. You lose a deduction you earned, or you claim something you can't support. Confusion. You mix personal trips with business trips because they happened on the same day. Clarity. You need a consistent method, and you need it to match what you report. Here's the key idea without getting lost in technicalities. If you use your car for business, you generally choose a method to calculate the deduction, and that method requires clean tracking. If you're reimbursed by an employer, your situation is different than if you're self-employed. If you financed a car, there can be special rules about what interest counts, whether it's personal or business, and what documents you'll receive. Action. Keep loan statements, mileage logs, and a simple note of what the vehicle was used for. Now, parents, because filing changes hit families every year in ways that feel small but add up fast. Credits and deductions for children can shift. Amounts, rules, phase-outs, and refundability details. I'm not going to repeat any viral numbers you've heard, because those vary by year and by the final guidance. Instead, I'm going to give you the filing behavior that protects you. Verify each child's eligibility, verify identity numbers, and verify residency requirements. And save the documents you'd need if your return is reviewed. Attention reset. The system doesn't know your family. It only knows what's on the return and what's on file. Consequence. A tiny typo in an ID number can delay a refund or reject a return. Confusion. You assume the software will catch it, but software can only check formats, not truth. Clarity. You must verify names and numbers match official records exactly. Action. Compare what you type to the actual card or document every time, even if you filed for years. Now let's hit the app payments area, because this is the fastest changing part of filing for everyday people. If you get paid through platforms, marketplaces, or payment apps, you might receive a form, or you might not. Either way, income from work is still income, and you still report it. The mistake is thinking no form means no reporting, or thinking a form means it's all taxable even if it includes reimbursements. This is where that overlooked detail matters most, and we're getting close to it. Consequence: you get a form that includes gross payments, not profit, and you panic. Confusion: you don't know what part was a personal transfer, what part was a sale, and what part was payment for services. Clarity: your job is to categorize, document, and report accurately, not to guess. Action: keep separate accounts when possible, and label transfers so you can prove what they were later. Here's the myth versus truth moment you need to hear. Myth: if I get a form, it means the IRS is accusing me of something. Truth: most of the time it simply means a payment processor reported totals, and your return needs to explain what those totals represent. Myth: if I don't get a form, I'm safe. Truth: forms are reporting tools, not permission slips, and you still report taxable income even without one. Attention reset. This is where people accidentally create the exact mismatch that triggers notices. They report only their profit, but the system sees a bigger gross number on a form, or they report the gross number as if it's all profit and overpay. Or they mix personal transfers with business deposits, then can't explain the difference later. Action: build a simple income and expense summary that you can defend calmly. Do you want me to walk through a quick example of how to separate gross in from profit kept for your kind of app income? Now I'm going to give you the common mistakes section, but in a kind way because these are normal. Mistake 1 is filing too early with missing documents, then having to amend or explain. It feels productive, but it can backfire if a late form shows up. Mistake 2 is ignoring a corrected form that arrives after the first one because it looks minor. Even small corrections can change matching. Mistake 3 is rounding numbers casually. Rounding isn't always wrong, but careless rounding across multiple categories can create small mismatches that look bigger than they are. Mistake 4 is mixing business and personal in one account, then trying to sort it out during filing week. That's how people forget expenses, mislabel income, and lose deductions they could have claimed. Mistake 5 is guessing on dates, especially for when income was received or when an expense happened. Mistake 6 is relying on a friend's advice as if it's universal. Your filing status, state rules, and income type change what applies. Mistake 7 is clicking a link from a tax support email or text and entering personal info. Even if the message looks official, it can be a trap. Action for all of these is the same: slow down, verify, and keep a paper trail you understand. Attention reset. Notice how none of those mistakes are being bad. They're being rushed, being tired, or trying to simplify something that requires one extra step. So now let's build your step-by-step filing approach that works even when rules shift. Consequence becomes clarity when you control the process, and the action is repeatable every year. Step 1. Gather every document that reports income about you. Paychecks, year-end wage statements, retirement statements, app payment forms, interest statements, anything that shows totals. Step 2. Compare your own records to those documents and highlight differences. Step 3. Categorize income types so you don't mix side work with wages or personal transfers with sales. Step 4. List expenses you can actually support with receipts or logs. And Step 5. Only then do you start typing into software or handing things to a preparer. Now I'm going to tease that small detail most people miss again, because you're ready for it. It's not a loophole. It's not a secret deduction. It's the one place where the system checks you first, before a human ever looks. Most people focus on deductions, but this detail controls matching, and matching controls delays. We'll pin it down soon, and when you see it, you'll wonder why nobody told you earlier. If you're working with a tax pro, your job is still important. Bring organized records, not a messy pile and a hope. Ask what you need to track differently this year based on your income types, and if you're filing yourself, use the same mindset. Your return should tell a coherent story. A coherent story is harder to question. Attention reset. Let's do if this is you, so you can identify your situation quickly. If this is you and you work a regular job but also take small side gigs, you need to keep those streams separate. If this is you and you receive tips or commissions that vary, you need a personal tracking habit so you're not relying on memory. If this is you and you're helping a parent or filing for retirement income, you need scam-proof communication and document verification. Each of these situations has a different trap, but the same solution: clean records and clean matching. Here's the situation most people don't realize they're in. They are honest, but their paperwork is inconsistent. Consequence: their return becomes a puzzle for the system. Confusion: they think they're being singled out when really the numbers just don't line up. Clarity: if forms show one total and you report another total, you need a clear explanation in your records. Action: keep a one-page summary of how you calculated what you reported. Now let's pay off the open loop. The small detail most people miss is that the IRS matching process often starts with totals, names, and ID numbers on information returns. If your name spelling, ID number, or income totals don't align with what was reported, you can get a delay even when everything else is fine. That's why tiny typos aren't tiny in this world. Action: verify identity details exactly and reconcile totals to your documents before filing. Attention reset: that payoff matters because it turns filing from stressful to controlled. Now you can see why a careful review beats a fast submission. You also see why scammers love this season. People are primed to react instead of verify. So let's add scam proofing into your filing workflow, because protection is part of being accurate now. If you get a call, text, or email claiming there's a problem, you do 3 things. You do not share codes, you do not click unknown links, and you do not trust caller ID. You ask for the issue in writing, and you initiate contact through an official channel you choose. If you receive a letter, read it slowly and verify it's real before responding or paying. Action: when in doubt, talk to a qualified tax professional you already know or verify through official methods you initiate. Do you want a quick red flags checklist for messages that pretend to be the IRS but aren't? Now let's talk about the part nobody enjoys: adjustments and updates during the year. Rule changes can happen, but your paycheck withholding might not reflect them automatically. That can lead to one of 2 outcomes: a bigger refund later or a balance due later. Neither is good or bad, but surprises are what hurt. So you pick: get more money in each paycheck or get a bigger refund later, and you plan for it. Consequence: you wait until filing to discover you've been underpaying, and now it's a scramble. Confusion: you don't know how to adjust without messing it up. Clarity: you can do a mid-year check and adjust withholding carefully, or set aside money if you're self-employed. Action: schedule one calendar reminder halfway through the year to review income, withholding, and major deductions. Now for self-employed and small business owners, because your new rules often hide in deductions and documentation standards. Equipment, software, supplies, home office, mileage, insurance, and contractor payments can all be involved. Sometimes there are special accelerated write-offs or timing rules, and those can shift. I'm not promising a specific percentage or special program here because those details require current year verification, but your defense is consistent. Document what you bought, when it was placed in use, and why it was business-related. Attention reset: you don't need perfect bookkeeping to be safe, you need consistent bookkeeping. A spreadsheet you maintain beats a shoebox you fear. Track income as it hits, track expenses as you pay, and keep receipts in a place you can find later. If you pay contractors, keep the records you may need for their reporting. Action: once a month, reconcile your records to your bank statements so nothing goes missing. Now let's do the "do this today" mini checklist as normal sentences you can actually follow. Do this today by making a folder, physical or digital, labeled for the tax year you're filing. Do this today by listing every place money came from, even if you think it was small. Do this today by checking that your legal name and ID number match your official documents exactly. Do this today by starting one simple log for tips, mileage, or expenses, whichever applies to you most. Do this today by choosing one trusted way to verify official contact so you don't react to random messages. Attention reset. Notice how none of that requires you to know every rule. That's the point. You can be calm and still be accurate. Consequence becomes manageable when you control inputs, and clarity arrives when your records tell the story for you. Now I want to revisit that open loop one more time in a new way because it's that important. The detail people miss isn't what deduction exists. It's whether their return can be instantly matched to what was reported about them. When it matches, things move. When it doesn't, you enter the slow lane, and you may have to prove what you already know is true. Let's recap everything in clear words. Rule changes matter, but paperwork changes often matter first. Your safest approach is to gather documents, reconcile totals, verify identity details, and track the categories that are easiest to forget. Tips, overtime, app payments, vehicle use, family credits, and retirement income each have their own traps. And scam safety is part of filing now. Never share codes, never click unknown links, never trust caller ID, always call back through an official number you choose. Here's your final warning, and I'm saying it so you don't learn it the hard way. The fastest way to turn a normal return into a stressful season is rushing while missing one form or mismatching one total. But here's the hopeful part. You control the inputs. You can slow down for 1 hour, verify your details, and build a record trail that makes your return easy to defend. So tell me, what kind of income do you have this year, and what's the one area you want help double-checking first?